Hey guys, I got Lawrence Lepard. This guy is my most favorite Bitcoin OG player.
You must have a low standard.
Well, only with women. But with smart intellectuals, I have a very high standard. I love the way you came out of institutional markets. You have a framework that you understand how these guys work. Yeah. And to me, that's kind of been...
But I'm not one of them.
I got you, but it's kind of been missing in part of part of the menu at Bitcoin is I like people that have been in the legacy world so we can understand, hey, what is Bitcoin going to need to do to navigate that? So happy that you're here.
Thank you. Yeah, nice to be with you, Gary.
Really glad that I drove out here to see. We're at Bitcoin Day in Naples, by the way, guys. Nice little showing, about 150 people. How you doing?
I'm good, thank you. How are you? Yeah. All good?
I'm good. I'm glad we got this ETF stuff. I had to sleep 3 days. I can't imagine what the guys from Bloomberg.
Yeah.
They must be exhausted, right?
Oh, absolutely.
They did an unbelievable job.
Yeah, it was a lot of work.
Eric and what's the other gentleman's name? You remember?
No, I don't.
I think they did awesome work on the ETF, following it, keeping us informed.
Yeah.
Where are we today? We're Saturday, January 20th. How much money has rolled into the ETFs?
I'm ashamed to tell you, I don't know the exact figure. You probably know it better than I do. I think it's around $2 billion. Is that right? Am I right? Plus or minus?
You're saying net?
Net, yeah. Because some of it came out of GBTC, as we all know, and then other new stuff came into the ETF. You might know the numbers better than I do. I'm really not the best guy to ask that question to.
Well, the number that really shocked me was something I heard last night. I can't remember where. I think it was the Bloomberg guys. 3% of all the Bitcoin ever mined, the 19.4, is in the hands of Fidelity and BlackRock.
Right.
In 5 days.
And we're just getting started.
Is that stunning to you?
That's stunning to me. And
like if that isn't a success, I don't know what is.
Yeah, that's right. And we're just getting started. As we talked about in the conference in there, there's a lag time on these things, right? It takes time for these institutions to move. They don't move on a dime. You know, it takes time.
Yeah, you say that, but I've actually been really impressed. Excuse me. Like their marketing programs, boom, they're live. So they've been working on this for months and months. They've had for them to launch, everyone launched their own marketing program. They knew weeks ago this was already done.
Yeah.
Done deal, right?
Yeah.
So I think a lot of stuff, I think we're going to see a very speedy process here because we're thinking everyone's starting from scratch.
No, that's right. That's right. I mean, the reason this whole thing happened, just as you know, and I will point it out to the listeners, is that the Delaware courts, ruled in favor of GBTC being an ETF, and so they, I don't think there's any way in hell Gensler wanted to do this, but he was forced to do this, knowing that if they didn't do it within the time frame specified, that the court was going to, they were going to take it in. They were all going to get together, take it into court, and so he had to do it. And as a result, all these ETF players, they put their, they got their ducks in a row.
Yeah.
But again, it does take time. I mean, conversations need to take place. I mean, you don't just, have your RIA manager, call up all his clients day one and say, we're putting money into this thing. You've got to explain it. You've got to have written work that shows why it makes sense. You've got to talk about the Sharpe ratio. You've got to talk about historical performance. All these things, all these bricks need to be put into place. And they will be. And not in years, in weeks and months. And I think we haven't seen the God candle yet, but in my opinion, the God candle is coming because they will soak up the excess supply and then they'll just keep buying. And as we know, 70% of the coins are in hands where it's not going to move.
Yeah.
So there's a limited supply.
Yeah, I think you're totally right. The families that are going to invest in this, that are really going to boost, they're going to be coming in for 4 or 5 years. They're not in a rush. They don't care if they buy it at 80, 40, 20. They're going to buy it. They're going to tailor it in. They're going to leave it alone for 5 years.
Yeah. Well, and even right now, I'm sure, just because of the way the item trade, the Bitcoin, the item, just because of the way the asset trades a little bit based on momentum. I'm sure there are people who bought it at 48 or saw it at 48. Now they see it at 41. They're like, oh, I can wait. I'll get it cheaper.
Yeah, that's right.
And so,
if you're sitting on the edges outside of Grayscale, and it moved, you're gonna.
I'll
reload in a couple weeks. Let's put some pressure on this thing.
Who's to say it doesn't go to 36? And so you're sitting there saying, I'm in no rush right now.
Yeah.
I mean, it tends to, as we all know, it tends to FOMO up, and then it tends to on fear trade down. And I'm not saying it's going into the 30s. I kind of don't think it will. I think we're kind of bottoming here around 40. That's just my gut. But, you know, it wouldn't surprise me if it went into the 30s. If it did, in my view, that'd be a super buying opportunity.
I've been surprised that it didn't already pierce 40.
Are you? Yeah.
Yeah, because this market wants news.
Right.
Right. We're starved for news.
Right,
That's what
right.
drives this price.
Yeah.
And if it's not any positive news, then I thought it would get sold off. And there must be some whales out there somewhere.
Yeah.
Getting rid of some of their coins because somebody's doing something.
Maybe, or maybe it's just the GBTC money moving out and some of it hasn't been recycled. I think some of the people who are selling GBTC are probably going to move to self-custody.
Yeah.
And that takes time. Some are swapped. I mean, I know in my case, I had some GBTC and some retirement accounts. And what I'm going to do is just swap it right into one of the ETFs, probably the Fidelity one for me. But that's just because I trust Fidelity more than I trust BlackRock. I mean, and I don't like ETFs, but most of my coins, all my coins really, are self-custody. But when you have a retirement account where to withdraw it would create a penalty.
Yeah, that's right.
I mean, this is the only way to play this asset. So
yeah. And look, if Fidelity goes under,
yeah. We're in a lot of trouble.
We have more problems than being
exactly.
a Bitcoin
we're in a lot
wallet
of trouble.
with 1,000 Bitcoin. Like, we're in trouble, okay?
Yeah.
This has been my whole point about the Bitcoin standard being tomorrow. It's like, Mad Max, man. Let's go Mad Max and we'll all do it. But that's not a world I want to live in.
You need brass and food, not these assets. Yeah.
Yeah. I personally don't see the entire financial industry imploding.
No.
In my lifetime. I think we can print, man. We can print.
Not completely imploding. I mean, Mad Max, right? I'm sure you agree with me on this. I can certainly see another March 2020 event where the printing is really, really aggressive and large. I mean, in my view, and I just wrote a quarterly report, and it's on my Twitter feed, it's on my website. In my view, there's a very high probability that sometime in the next 6 to 12 months, I should say, something breaks again in the financial system. I mean, the Silicon Valley Bank CRE issue, and in that case it was government bonds, but it's being followed by other banks having problems with CRE, commercial real estate. I think that's a problem, and it's going to surface at some point. And when it does surface, that the Fed is going to bring fire trucks. They're going to come in and they're going to aggressively try and make sure things don't get out of control.
Is that good or bad for Bitcoin?
Oh, it's good. It's enormously good.
Totally.
It's enormously good.
Yeah.
I mean, it's good for all. It's good for all assets that the government can't print. That's the point I made this morning. The story of our time, and I'm sure you agree with this because we've had this conversation many times. The story of our time is that the federal government is broken and cannot stop this doomsday machine of deficits and spending. And as a result, and the way they solve it, I mean, they can definitely keep it going, but they have to keep it going through printing and monetary debasement.
Yeah.
And so, as an investor and asset holder, you want to hold assets they can't print. And, Bitcoin's at the top of the list, gold's up there, silver's up there, real estate's up there. Anything tangible, the government can't print it. In terms of government dollar terms, it will be worth more in the future as a better store of value than a dollar or a bond. I mean, the bond is probably the worst store of value in the world right now, in my view.
Yeah, you're talking compared to leaving it under the pillow, the U.S. dollars. It has to go to work, generate some yield.
Or be in an asset that can't be debased.
Yeah.
Because I think, as my good friend Greg Foss has always said, monetary debasement is just built into the system, the way the system is today. Now,
it is the system.
It is the system, right?
It is the system, Greg.
Now, to be fair, though, that could change. And
Really?
Let me say why. And I always say this because people ask me when they invest in my fund, they say, why? What's the risk here? What could go wrong? And I tell them, and then they laugh, of course, because they know it's unlikely. Let's say the government got really responsible. Let's say the U.S. federal government said, you know what? We're going to means test Social Security. We're going to cut it back. We're going to cut back Medicare. We're going to cut back Medicaid. We're going to stop these wars. We're going to shut down all these military bases. And we're going to balance the budget, right? I mean, if that happened, the monetary debasement bet that we are all making wouldn't be nearly as possible. I think we're too far gone for that to happen. And I think even if that did happen, then the economy would fall apart because we'd have a massive recession. But
wouldn't that be positive for Bitcoin?
Yeah, it probably would because it can't go bankrupt. In a recession, if you look at, what we're talking about if they did that and we went that route would be a massive deflation. It would be like the 1930s.
Yeah, that's what
and in the 30s.
Could we see that? Could we see that?
I don't think it's likely, but I think it's not.
Really?
But I think it's not impossible. And I say that because there's just so much debt, and the debt has to get, we have to resolve this debt one of two ways. We've either got to print to keep the system going, which is what we're in right now, which is what we expect. But you know what? I mean, markets have a way of doing what you don't expect. And it's possible that even with all that printing, we still get debt going bad, and we just get massive deflation. And I think about that a lot. And so we didn't have Bitcoin back in the 30s, but the 1930s, we did have massive deflation. And I'll tell you what was interesting about it. Gold was your inflationary solution, always has been pre-Bitcoin. What was interesting about it is gold did okay in the 30s. I mean, the gold price was fixed because the government locked the price at $35 after they revalued. But the gold mining stocks went up 10x. And more importantly, that gold price was fixed at 35, but the price of all other things went down substantially. So if you held gold, you know, you didn't have your $35 an ounce gold going up in price, but you had your prices of everything coming down a lot.
Right.
The price in the 30s, your prices really fell. I mean, I know as an example, I've said it in other podcasts, my grandparents bought a house.
I was going to ask you, housing prices in the 30s, we forget.
Yeah, they
$3,500, right?
Right, they bought a house, I think it was $7,000, that in 28 would have been, you know, $20,000 or $30,000.
Right.
And that's because nobody, I mean, in a deflation what happens is nobody has any money. And so the price of everything falls. And if you've got a sound money asset, I mean, it might fall. I mean, the nominal price of Bitcoin might fall. The nominal price of gold might fall in a very big deflation. But the price of everything else will fall faster.
Right.
And I think it's a reasonably safe bet because of the Bernanke speech and the past 50 years of behavior of the Federal Reserve, that if we do have a serious deflation, they're just going to print like crazy. You know, they have to. I mean, you know, if you think about how a politician thinks, they think about how do I stay in office one more year, one more day? How do I continue to get these benefits? You know, I'm Elizabeth Warren. I've never made any honest money in my life. I'm worth $60 million. I really love this gravy train.
It's unbelievable.
Right? You want to keep it going. And so they're faced with a choice. You know, don't print and let the whole thing collapse and have a massive deflation, get thrown out of office.
Blame it on Trump.
And blame it on Trump. All the bad shit, right? Or print. And admittedly, you have inflation, but at least you get to kick the can and keep the game going. And
so let's just shift here.
Yeah.
Trump printed a lot of money.
Oh yeah.
Okay.
They all do, to be honest with you.
Yeah, totally. Trump comes into office.
Yep.
What's he do? Is he going to go out of his way to submarine Bitcoin? And
I don't think
1 million or 2 million new jobs a year in the United States?
I don't think so.
The jobs alone are not market. This is another thing. Bitcoin does not market how many jobs can be put to work.
Yeah.
You have how many companies in this space?
A lot.
I have a company, 28 people working for me, right?
Yeah.
So those are real jobs, man.
Yeah. No, I mean, look, Trump will, in my opinion, do everything he can to keep the economy going, and you know, he'll
drive rates down and he'll print.
Right. And, well, exactly. and look, I mean, he'll be a different flavor than Biden in terms of the spending. There won't be all this woke spending. There won't be all this DEI spending. There won't be some forgiving stupid war spending. You know, and a lot of things will be really good compared to Biden, but he'll face the same issue of if I don't bring rates down. And you know, when he was in office, remember he kind of went after the Federal Reserve a couple times.
Yeah.
You know, and he'll do that again.
Yeah.
I mean, you know he's aggressive, and he'll get in there and just say, "Gosh, you got to take the rates down to zero again."
Yeah.
Or this whole thing's going to come unwound, and I'm not going to stand for it. And so the pressure, I think, and he'll rile up his base, and so the whole country will be pushing for that. And so I think the pressure is going to be just enormous.
It won't take much to rile him up.
Yeah.
And I got a secretary making $60,000 a year, and she's like, "Hey, I'm not making enough money to pay for anything, right?" This is a real thing.
I mean, sadly, the people in the world don't, you know, the people who vote and all these, and people in America in general don't realize that they're creating the inflation with the money printing. But, you know, they also don't like the notion of being unemployed and broke.
Yeah.
And so they're going to put enormous pressure on people to cut rates. And they're going to probably come back and ask for stimmy checks and universal basic income and all those things. And it's arguable that, you know, that'll get done, that those things will happen. I mean,
well, if not here, they'll do it in Europe, and then we'll do it. Right? I mean, Europe's a train wreck.
Oh,
Europe
totally.
makes us look like we are actually a solvent,
correct,
perfect company.
They had 17 trillion of negative yielding bonds, you know, at their peak. I mean, what was that all about, right? It's a mess. It's a complete mess. And look, in a broken monetary system, I try and keep it simple, right? In a broken monetary system, and I think most people studying it carefully would observe that we do have a broken monetary system. You want to stay with assets that cannot, that are
can't just go away.
That can't just go away, and then can't just be issued willy-nilly. And so, even though a lot of Bitcoiners think gold is old-fashioned, and it is, and it's going to underperform Bitcoin, it's not a ridiculous thing to hold.
Yeah.
It's a less volatile form of sound money. It's been around 5,000 years, and it will retain its purchasing power. I mean, if you want to grow your purchasing power, Bitcoin's a much better choice. But if you want to maintain your purchasing power and protect yourself, gold is the number 2 choice behind Bitcoin. If you can't stand the volatility.
Yeah, we've talked about gold before. If I'm remembering correctly, you could be bullish on gold, right?
Oh, I am bullish on gold. Yeah.
Like really bullish.
Pretty bullish. Yeah. I mean, I can't guarantee it.
Yeah.
Nobody can. But gold will go up. There's just no doubt.
You're talking about like 8 to 10x.
Yeah. Well, that's the outside case. I mean,
Yeah.
I think it's easily, it's around 2,100, 2,050 today, something like that. 3,000, that's a no-brainer. 4,000 a few years out, I can see that too. What the big unknown on gold is what happens at the sovereign level, and what happens if and when we kind of get to the, just mapping this out a little in the future. Things are going to get worse. Inflation's going to get worse. People are going to scream louder, and at some point, there might become something that looks kind of like a Bretton Woods 2 or Bretton Woods 3, and a bit of a reset and an attempt to salvage the system with a sounder money. And sadly, I don't think the world is ready and the leaders are ready to do it using Bitcoin as the better form of sound money. But historically, gold has worked, and a lot of central banks own it. And so it's entirely possible that we go in that direction. And as Luke Grumman says, if they reset to a gold standard, it's not going to be gold to 3,000 that's going to do it. It's going to be a lot higher.
Yeah.
I mean,
that's where I was going with.
Yeah, I mean, just to answer your question even a little.
It's got to eat up all the debt. That would be a way to do it, right?
Yeah, I mean,
reprice gold.
Yeah,
to suck up
exactly
trillions of dollars.
Exactly. I mean, the U.S. has 261 million ounces of gold, and it's very interesting. I've cited this many times on podcasts too, and people don't understand it. Everyone says gold has a big monetary premium. It really doesn't. It's been beaten to shit and manipulated. So in 1971, you could take.
What do they mean by monetary premium?
They mean it's trading at a value much higher than the underlying value of the jewelry use or other stuff. That in other words, because everyone thinks it's a good form of money, it really trades at kind of a crazy value versus because it costs about 13 to 1,500 to mine an ounce of gold, sells for 2,000. That's not a huge profit. It's some profit, but not huge. It's not. Whereas Bitcoin has
not for the capital required,
right? And the time and the risk. I mean, as an example,
environmental risk all over the place.
Yeah, right. But just let me give you the numbers on historically. It's interesting. 71. If you took the broad money supply and you divided it by the number of ounces of gold the U.S. had, you actually came out with something close to the $35 an ounce, which is the 1944 Bretton Woods price. So
you're saying you just take the whole pocket of debt,
all the money outstanding,
all the money that's been printed,
divided by the amount of gold, you came up to $35, which is kind of. I mean, it was actually a little higher in 71, but in the early 60s it was $35. Okay, fine. Just fast forward. Let's say we're now today. Take that same monetary base, divide it by the 261 million ounces of gold. Gold has to be $80,000 an ounce to make it balance. 80,000. 80,000 is a long way from 2,000.
That's right.
Now, I'm not saying that's going to happen. Okay, I'm never saying gold's going to 80,000. That's not the point.
That would be a 1 for 1.
Yeah, that'd be
they could do a 1 for 3.
At that, yeah,
they
exactly.
Could do a 1 for 2.
They've had gold standards work where it's been 20% coverage or 30% coverage, and that would be maybe $15,000 or $20,000 gold. But the point is, what those numbers show you is just how much paper money we've created in that time frame. And that's why, and how demonetized gold is. I mean, gold's really just kind of got a jewelry use now and a little bit of an investment case use. But there's nobody who gives a shit about gold anymore, really.
Yeah.
I mean, it's pretty much a dead asset because, it's yours and my generation that's aware of it. I mean, these guys, they're not buying gold.
No, that's right.
They're buying Bitcoin, because, and Bitcoin is digital gold, really. So, and that's where the future is, and that's why there's so much more upside in Bitcoin. I mean, Paul Tudor Jones said it very well. He said, Bitcoin is the fastest horse in the monetary debasement race, and it really is. So,
and it doesn't tire out. It doesn't need a jockey, doesn't eat.
I got a real chuckle when Saylor in that interview said, yeah, Laura, it's going up forever.
Yeah.
I thought that was one of his better lines, And how high is it going? I don't know. Nobody knows.
Yeah.
And what's the curve going to look like? I don't know that either.
Last question here. You think it's going to be more or less volatile in the next year?
I think probably more. I think that
Me too.
because if you look at it historically, this halving, which is coming in April, as you know, the reward, the block reward for the miners is getting cut in half every 4 years that happens. I think that's going to make some big changes. And so my sense is we're going to see some fireworks here in the next 18 months.
Yeah.
What does that mean? How high? I'm not going to predict. I don't know. I mean, we're in the 40s, low 40s. I mean, I think 100 is kind of falling off a log. You got Samson Mao saying it's going to 1 million. You got Kaiser saying it's going to 200. I mean, that range is the potential. I mean,
that range works for me.
Yeah, I was going to say. I mean,
I'm patient. I'm not in a big hurry. You?
What? 100 works for me. So
Yeah.
what are you laughing at?
You're sticky as hell. Like, I love your words.
Oh,
What do you mean?
I mean, I could listen to you talk for a long time.
Oh God. Well,
serious.
you're being kind. I don't know.
No,
Yeah.
but it's you can take it in. You can
Yeah.
digest it. It's
Yeah.
not a bunch of monkey funky
Yeah.
stuff. Hey, great to see
Yeah,
you.
hey, nice to
Thank
see you
so
too.
much. I
Yeah,
want you
thanks
to
for having me
make
on
sure
your
you
show. I
speak.
appreciate it.